Coinbase reports Q1 results on May 7, with estimates cut sharply after a difficult crypto quarter. In the Coinbase Q1 earnings story, the pressure point is simple. The market is not only waiting for revenue, it is testing whether Coinbase's broader platform can offset weaker trading activity. Consensus points to about 36 cents in EPS and around $1.5 billion in revenue after crypto exchange volume cooled. The viewer should not treat the number alone as the whole story, because the useful part is who is exposed, what mechanism created the pressure, and which signal shows whether the issue moves from claim to follow-through. The opening read is therefore narrow and concrete. 1.5B revenue sets the scale, while May 7 print tells us what would make the next stage visible. That framing keeps Coinbase earnings tied to evidence instead of excitement. Bitcoin fell 22% during Q1 2026, Ether fell 41%, and global exchange volume dropped from its October 2025 peak. Subscription and services guidance had already been lowered, adding pressure before the earnings release. That baseline matters because it gives the story a factual floor before any reaction builds around it. The strongest confirmed scale marker is 1.5B revenue, while 36 cents EPS adds the context that keeps the event from becoming a vague market talking point. It also explains why Coinbase is central to the case rather than background noise, and why the timeline or structure cannot be skipped. Without that baseline, 1.5B revenue can be misread. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Coinbase Q1 earnings turns on the mechanism. Coinbase revenue still depends heavily on trading conditions, but custody, base, subscriptions, and new product lines change the mix. A weaker quarter can look different if recurring revenue, take rate, or guidance holds better than expected. That is where a surface event becomes more than a headline. The mechanism explains whether the pressure sits in liquidity, compliance, custody, user access, product design, security, or market structure. In practical terms, the link between earnings setup and volume drop is what makes the outcome matter beyond a single announcement or price move. That is the piece viewers can actually monitor. The affected side is coin investors. Crypto equity traders and digital asset investors will read the results as a signal for exchange demand and diversification. This is the practical consequence. The event can change how people use a platform, how traders read a level, how issuers design products, or how regulators evaluate a risk. The segment keeps that effect narrow because unsupported ecosystem-wide claims would blur the evidence and make the story less useful. The useful question is what coin investors can actually do or observe after this event. The consequence is concrete only where that group is involved. The unresolved piece is whether low expectations are low enough and whether forward guidance supports the everything exchange strategy. That does not erase the confirmed facts, but it does limit how far the conclusion can go. Subscription revenue, take rate, custody metrics, and Q2 guidance will show whether the business is diversifying. This is the difference between a strong signal and a completed outcome. Viewers should know which part is established and which part still needs proof. The missing evidence matters because May 7 print can change the interpretation without changing the baseline facts already on the table. That caution matters while the open item remains unsettled. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The next signal is May 7 results and forward guidance after the close. For Coinbase Q1 earnings, that matters because the earnings print will test whether Coinbase is still mainly a volume story. If that signal appears, the story can move into its next phase. If it does not, the event remains important but unfinished. The clean way to follow it is to track that trigger, not to assume the ending before the evidence arrives. The final readout is intentionally specific. May 7 print is the point where follow-through can be judged. Everything else is context until that signal changes.